All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but I hate to break it to you. The stock market is trapping you, okay? So we have a lot to talk about. I have to go over all of the data. We're going to explain what happened. You even had a really abysmal earnings with Intel after hours, but I just want you to see something. I don't know if you have seen something like this, but this is probably going to be our theme of today and probably the next couple of days. But have you ever seen the eye of a storm? Like, you see this right now. Shout out to base hunters, man. You know, but look, it's all sunny. It's calm. Like, look at this, man. This is beautiful. You know what I'm saying? I don't know if you've ever seen anything like this before. You know, we're going through. Let's, let it play. Look how beautiful it look, right? And then, look what it turns into. Okay, look at this. It's amazing. It takes a little bit to load. Please hold. Yeah, look at that. Okay, hold on. Watch. It gets crazy. Oh, man, the camera's all wet now. It was just all sunny. Look at this. Now things falling over. How he crack his windshield, man. Oh, it was just beautiful 4 minutes ago. So that is supposed to explain the market right now. So, Chad, we have a couple of big events here on the way, but I'm sure you notice it. The market keeps on bouncing this year or setting another high, and believe it or not, it's already almost the end of the month. But that being said, let's talk about a little bit with what happened today. And the first thing is, here is all of your data, and I'm going to dive deeper into why you are getting what you are getting, but GDP came in today. It was a 2.9. It was above expectations. You remember not too long ago, they said GDP recession. Well, that's not what's showing up here. Personal consumption, it went down a little bit, and some people noticed that, but every other thing pretty much did better than expected. And even the advanced trade's good, not anything too bad. The jobless claims was strong again, but I mean, the last 4 weeks, I believe we have ignored every single jobs report. So pretty much the data wasn't as bad as expected, even down to the Kansas City Fed. It was -1 instead of -0.8 or -8. And then even real estate sales came in positive 2.3 instead of -4.4. Now, tomorrow, we will be getting a whole nother set of info, and these are all going to be important. You got personal income, personal spending, PCE, pending home sales, and University of Michigan consumer sentiment. We're going to go over all of this, and this is going to be a big driving factor. But now, with all of these things happening, I want to just keep in mind, or have you at least notice this, the whole game of chicken, the market expecting, even with the data and how it's coming in, even with this 13% market rally, the bonds are still saying that the Fed is going to be cutting rates this year. So now it doesn't make sense, because you're like, wait, I thought this is soft landing, hard landing, soft landing, hard landing. But here's another pretty picture for you. It's maybe based off of this, or some people are expecting we are in the eye of the storm and things could get worse. And even if it's not, if this leads to Powell stopping on average anytime since 1971, where the Fed has stopped raising rates, they cut rates within 20 business days. The median is 90 business days. So either way, if you stop by March, you stop by June, I mean, it's either looking like June, July, September. I mean, do the math there. So, Chad, the point is we are getting a lot of movement. We have data tomorrow that may change things, or very well, the last 5 Fridays in a row, you have watched a squeeze into the bell, but we are dealing with a lot. The data is getting a little trickier, but not really. And then we have Powell and more earnings on the way, not to mention all the other earnings this week. So got a lot of things I'm going to go over. I'm also going to go over the plays and what I am holding, and then how we are setting up for tomorrow. So, Chad, do me a favor, if you could like the video and make sure you're subscribed. That always helps out with the channel. We do this all for free, and we're going to be live. We're going to be doing all of this live every single day, 7 hours a day. So show some love. I hope you're ready for more, and run it, baby.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off that bat, ladies and gentlemen, the market should not be liking all of this data and this reaction that we're getting. But to give you the simple reason as to why this is occurring, it is simply not as bad of data as there was last week. It's kind of pointing to a soft landing rather than a hard landing. Hopefully that little lesson there with rates gives you a little bit more insight, but it's very simple. This is the Kansas City Fed, and I think this chart highlights a lot of what we've been dealing with, because over the last couple months, not only have you been dropping, I mean, look at everything cratering. If this kept going lower and lower, and some other indexes, we've seen them go below 2020 or in the 2020 levels. This was spooking people. Remember, you had a big down day last week. That was part of it, but what ended up happening here, you had a bounce. This is the expectation in purple. By that bouncing up, this kind of even explains GDP. Remember, it wasn't too long ago. People saying, oh my gosh, recession, all of that, but GDP finally bounced. It might even be bouncing better than the summary of economic projections the Fed outlined already. So keep that in mind. People have brought up lagging indicators and all of that, but what I'm trying to tell you, man, the price moves are making this all way more complicated than what it needs to be. So we're going to talk about it a little bit, but let me jump right back in here to tomorrow, because the PCE tomorrow, this has a chance to stop the automatic melt up. But notice I'm calling it the automatic melt up. The idea here is you got to respect the bulls. We've been talking about this, and the fact is this is a strong rally. It does not matter. I know the recession, the yield curve, and all of these things. There's not good things, and we still got to deal with Powell. But when it's all said and done, this is a violent rally. There is force behind it. There's people changing their minds and their opinions. So we got to watch what happens. And until we get equal or opposite reactions, you really need some hot data, or basically the PCE coming in hot and saying, sit down, mother, that will bring it down. And then there's also going to be personal spending and personal income. They may not be as big, but they could also be a big driver. But until anything changes, I'm expecting an automatic melt up, even though I am downside tilted coming into Powell. So what I want to bring to you, man, it's very simple. We've been saying this. The price has changed a lot on the market, but in my opinion, not much has really changed. I still believe we have not missed the bottom. I don't know if October really was, but I'm not really believing it. And even the fact is, I've stuck with this. I've just told you, even when we go down, just like last week, I still don't underestimate the bulls being in control. And that's why I showed you what I showed you in the beginning. I really believe we are in the eye of the storm. And I guess the best part to all of this is we have seen this before. Again, this here was in March. Just look at how that played out. Even in August, on both of these instances, I remember this is where we did our free butterfly. If you could recall, it didn't seem like a good idea, but you've had automatic melt-ups. The most hated rally right here, that was after bad inflation. So the whole idea here is things could get driven by the bulls. People are feeling optimistic. The sentiment from earnings has not been that bad, but when it's all said and done, we got to get to these other events, see Powell, see what really happens, and really now we're going to start hearing from the Fed after we get the Fed, and then the blackout period goes, and now what happens after that, and then what happens with the rest of the big tech. So it's looking sunny for now. If we go through the eye of the storm and it's still sunny, then the bulls are going to run with it. If not, well, we might see what we've seen about 6 or 7 times now over the last 12 to 18 months. So keep that one in mind. That's pretty much it, though, now. So let us get into the plays. But right off the bat, I made a couple of plays today, and actually all 3 of your plays are what I played. So I'm going to start here with Intel, and we're going to see how this one plays out tomorrow. They had one of their worst earnings in a while. I believe they have guided down to a point. Last time they ever guided near this is like 2016 numbers. I believe they've missed 9 of the last 10 earnings, and now they've missed another one. This is like Sam on crack, because they keep missing. And this is really bad, and you've seen how the chips have bounced. So I was expecting this to bite the market a little bit harder. That's what I'm going to be looking for. It kind of had an effect there as the call went on and all of that. But watch for a broader chip effect tomorrow. Any of those chip names, see if that could kill the sentiment a little bit. But there is going to be plays with all of these chips now, and especially as we get through Powell and all that. But as far as the actual play, I took a share short after hours. I grabbed 300 shares short at 28.48 after it dropped. I covered for about like $1.20, so I made like 360 or something like that. Not too bad. I will be looking tomorrow to see if we could reload and make a play, but quite frankly, I thought it already kind of dropped a lot. And then you start pulling out the yearly chart, man. It's going to be interesting because I believe they are even at the 2015, 2016 level, which they guided to around here. So there's a little bit more downside. It was even lower not too long ago. So I want to see, but it really depends on sentiment. And some of these earnings have just gotten eaten up right away. And that's what you got to watch out for, respecting those bulls. But that is play number one. Then play number two, American Express and Visa. I grabbed American Express shares today as a pre-earnings play, got clobbered a little bit, but then Visa reported after hours. They did really good, especially compared to a lot of the other credit card providers like Capital One and even MasterCard. So that was a good sign. I'm expecting this one to do good. They're going to report tomorrow morning, but all of the card companies, no matter what, even if they did bad, they all found a way to bounce. So let's see as we wrap up the earnings tomorrow with AXP and how that plays out. But this could be its own little pocket tomorrow, and I am going to be watching out for that. So I have about 100 shares. I got them at 158.11, so I'm down $2 a share now because I bought them really early on that bull move because of Tesla. So we'll see what happens. That is play number two. And then finally, play number three. This is the other play that I grabbed today. Oxy. They have less premium than some of the other oil names, like literally XOM. They have hit their all-time high here today. Chevron, they're running. Some other oil names are lagging behind, but Oxy, it's solid. It has the Buffett effect as well. And my main logic here is just that CVX buyback. They're literally, it's just one of the best things that could have happened for oil stocks. And even though oil has been coming down, you'll notice a lot of those oil names have actually held up. So now with a giant buyback, if you don't know the news this morning or last night, CVX announced a $75 billion buyback. I have to say it like that every time because it's huge. It's almost about 20% of their overall shares outstanding. So that is big. People are hyped up about it. I think it's going to be a good short-term swing. And then, maybe Buffett was expecting something like this with Oxy. You know what I'm saying? Let's see what happens. Let's see what happens. But that is the final play. I bought the shares. Where did I get them at? Let's see. I grabbed them early in the morning. That was the second play. I grabbed 100 at 65.56, and I think we're up like $1.50 a share. But again, compared to like XOM and all that, they are not at all-time highs. So we'll see what happens. But as far as everything else, I closed my Microsoft in the morning. We shorted this at like $2.50. I got just under $10 a share, like $400 profit on 50 shares. Bought the Oxy, bought the AXP, and then I got 25 shares of Broadcom. It was kind of related to Intel, and then there was news that actually that Apple news about them canceling the chips. There was a rumor going around that it was actually a positive development now and that Broadcom will benefit. So I decided to go with 25 shares at $5.96, and they are at a very, very big breakout point. The only scary part is that they are really high, and then we made the Intel flips there for the after hours. I guess that was like an hour and a half. We turned off the stream. I grabbed some food, got ready, and then, we're doing our thing. But those were the main plays. As far as everything else, good old ES is positive now by 1,300, but clearly I'm down $20,000 on that NQ. But now the best part is we have gains here. Now I have a loss, so it's like really it should be no more than a 15% difference. So I'm expecting that like worst case scenario, if this rips up $5,000, $10,000, this should go again 15% more. So it's going to be around this same level here, and then if I'm able to pull off the drop off, it's going to actually work out amazing. The bonds have been stalling on me. I had a good call out on when to stall, but I wanted to risk it, so still going to be holding that one, but still very confident. And then Broadcom, we're going negative on those now. They were kind of fluctuating. I had a little bit of a gain there towards the end of the day, so we're going to see how it plays out, but really watching those chip makers tomorrow. And then here are some of the other plays we're holding. There's the AXP for the morning. My Boeing short, man, I think they're going to do awful. I'm considering averaging, but I'm going to wait. But remember, I still have a couple plays working pretty heavy against me, or they're just not going up. That's why my balances kind of sucked in that, especially after cutting NVIDIA, Microsoft, Disney. We still have Apple that's kind of working for us, and then the Meta that's working against us. My Lockheed is an upside play, but it didn't give me what I wanted out of it. Procter & Gamble not giving me what I want out of it. And then now we pretty much have the Oxy, and then I think the Amazon went up, and then the fact was we got to close that Microsoft out. So kind of balanced out a little bit, but definitely now I have more of a downside tilt, or if I just get enough of the right upside, it could help, or if some of my upside that is down comes up, then we should be good to go. But otherwise, nothing has really changed too much with the balances. We're looking good, and I hope I'm buying myself enough time through the eye of the storm so we can finalize everything next week. But That is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, that mountain you have was assigned to you to show others it can be moved. You need to take any up or down side and learn from it. Don't let a challenge stop you from developing true skill, true faith, true endurance, baby. It's easy to cry and complain, but can you get yourself out of it? Can you climb the mountain? It's game time, baby. We're almost ending the month. That's it. 11 more to go after this, but there's opportunity, and you're seeing it, and what's here today could be gone tomorrow, and we'll see what it's going to look like by summertime, baby. So I hope you're ready. But, Chad, I love you. Have a good night. Are you ready for tomorrow? Let's go. We got more data, and then it's pow, pow, and then we waited for this, and then the CPI, then on farms and everything else. Horn.